Hi, everyone. Welcome to the TimingResearch.com Analyze Your Trade event number 203. This is the new live charting format. And so we got 8 analysts line up to give you their opinions on any stocks you want to look at or other questions you have. And of course, this is for educational purposes only. Trading is not suitable for all people. Please consult a financial advisor and only trade with money you can afford to lose. I am recording each session individually, and those will be available on the TimingResearch.com site, as well as Timing Research YouTube and your favorite podcast app. So today we are starting with Adrian Manz. He's joining us from vacation in Utah. So happy to have him here to open the day. And I'm going to go ahead and turn it over to him.
Great. So good morning, everybody. So as David said, I'm actually vacationing with family. So I'm trying to sort of balance things here. So that's why we're going a little bit earlier than most of you are used to doing at this event. It's a particular event. Thanks for coming early in the morning so that I can go hit the slopes at Park City with my kid, and he doesn't disown me here. But so we're only going to be trading. Actually, Julie and I trade together. You guys know who we are. Maybe you don't know who we are. We're a trading team. We trade together. Julie's going to be trading. We just the open here, the first half hour or so today, while we're doing this. And then after that, that sort of frees us up to go and do this ski trip and still have a chance to make some money in the morning. So the way that we go about our trading is to compartmentalize it. So this is nothing new, that we're taking the first half hour and making it part of the workflow or sort of a cutoff point. Do this all the time when we travel. And the way that we set this up is the first half hour of the day, we're looking for gaps, and we're looking for continuation moves on the indices, and we're looking for sort of follow-through moves on some key stocks that we hone in on because their volatility tends to be something that gives some good follow-through. So what you're looking at here actually is the QQQ. This is more of my midday screen, but it is something that I focus the rest of my day on. And I thought this might be sort of the most interesting thing for some of you, since it's looking at what I do over the course of the rest of the session. So we'll get into the early stuff second, and look at this first, if that's all right, since it's a half hour before the open. With the triple Qs, what I'm doing over the course of the session, and the software that you're looking at is ES. This is the ES EMS. This is Realtick. This is a platform that I've been using for 20, 25, 26 years. I started with this when the Townsends still owned it, and it was a relatively small company, and it ballooned. Of course, it's a massive platform. A lot of hedge funds use it. I definitely used it when I've been involved with hedge funds. We made the transition and always used. This is just a really tight front end that has very good direct to market capability. So you can just have really, really strong order routing, and it makes for a little bit of an advantage when I'm trying to get into trades, because you do get, by being able to route orders, somewhere other than this, sort of smart route destination. You can go ARCA, you can get directly down to the exchange, or, NASDAQ can go directly into the NAS. You get about an eighth of a second, which doesn't sound like much, but it's enough of a benefit to, in a fast moving stock, get you a little bit of an advantage. Something like the Qs doesn't really matter, right? You can just route through your smart route. But, effectively what I'm doing is, let's take a look at yesterday. Over the course of the session on the Qs, I'll start at about, really about 11:30 Eastern time. So 8:30, we're from Pacific Palisades, so like Malibu, California, right? So it's early in the morning for us. So at 8:30 in the morning, which is 11:30 Eastern, is where I start looking at what's going on, with the indices. So if I was looking at this, the first thing that I would do is go through and try to bracket off the volatility. We're order flow traders. We've always been order flow traders. We're looking for where are institutional orders likely to be sort of positioned and just sort of resting. And if you look at what I'm doing here, there's a pretty simple exercise, right? You don't have to go buy a bunch of indicators or add-ins or anything for your software. Just going through and you're bracketing off support and resistance. So you're finding the places that there's a lot of activity, and you're asking yourself, what's going to happen here if price gets back into this area again? And what these lines are telling me is, I think that these are the major support and resistance areas. I see how they interact with these pivot lines. You see that this is the central pivot, right? Just floor trader pivots in your software. This is your first support, first resistance, right? And it all just lines up and gives you a feel for where the market's likely to inflect. The next level of quick on the fly sort of analysis that I'm doing with this is to look at these things out here. These are volume by price algorithm bars. So there's a little bit different than volume by price. If all you have in your software is true volume by price or like a volume profile thing, that's okay. This is an algorithm that goes and weights the importance of volume at different levels. And what I like to see is this kind of a thing where we get these histograms, right, that line up around the level that we just isolated. You can see that the volume by price zones there very nicely overlap with these areas that we identified as being our significant inflection points. So that gives me a frame of reference. So that gives me confluence. That tells me I've got a high probability that something's happening here. And I've got a very high probability that if I wait for price to come to me, that I've got an opportunity to get in on the same side as the insiders. I'm going to mute this every now and again because I keep coughing, but so excuse me if I do that. But so when you come from an order flow trading background, what you quickly learn to avoid, and what I try to teach all of our guys to avoid, whether it's the boot camps or when we're working with them in our trading room in the morning, is you don't want to chase. You're not a hunter. You're a trapper. You want price to come to you, and the highest probability trades that you're going to get is when price comes back to one of these places that something happened before, and then gets you in front of the opportunity to join the same move that you had previously. So when you look at this again, you see that this inflection here got this move up into 295.86, and then when price comes back down again, same thing. All right, it gets up to the pivot as well, but really the inflection that I'm focused on is that one right there, and that is because when you're looking at the earlier activity, the significant stuff, right? Most of the bodies are buried right in there. This thing up here happens and gets you up through the pivot and everything. But the safest trade in this case is just a 290, 294.46, or really you would take it at that green pivot line there. And you're looking for 294.46 up to 295.86. Pretty big move right on the triple Qs. But yesterday was also a pretty big day. So when you get these big swings, you get these $2 ranges or so in something that normally only has a $1 travel range or a 50-cent travel range, you just work with what's in front of you. So I tell people all the time, right? The market doesn't really care what you want it to do. The market doesn't care how much you want to win or how much you want to, or how much you're willing to lose. The market's just going to do what it's going to do. And your job is to go and focus on these things as they're unfolding in front of you. So when it comes back down, you want to get some other things that say, I've got confluence of indication. So what I tend to do is I'll do these anchored VWAPs. Let me make sure that we're getting the whole trend here. Here we go. So I deleted my line, so just give me a second here. And these aren't, I also tell my guys, don't get too precise. with this stuff. You want to be able to eyeball it, and you want to see that you're capturing just sort of the meat of the move, right? And then, as I said, if you come in and you start finding things that give you confluence, now you already know you've got confluence, you've got an overlap of indication from your support and resistance and your volume by price data here. So now you go and you say, well, what's been happening over the course of the morning? So on the big downtrending portion of the move, this orange line is my volume weighted average price from the peak down to the trough in the morning. This has nothing to do with your traditional VWAP is just going to run over the course of the whole session, and this is time-based. So this will take any two bars on the chart that you select and say, what is my VWAP for this move up into here? And what's my VWAP for this move down into here? This move up into here? This move up into here, right up into this top. And you can see that those overlap nicely with the support and resistance lines. And that gives me further, confidence that what I'm looking at is actually the thing that I think I'm looking at. I'm seeing where there's going to be price action. I'm seeing that most of what happened over the first, in this case, 1 hour of the trading day, happened right around this price. So that tells me if price comes back down to this threshold level again, get my marker here so you can see what I'm talking about. If price comes back down to this level again, then it's a good trade, or it's a good trade idea to say that this is probably going to happen again, just like we thought it was when we looked at it a moment ago. And then, you see that when price comes back down in here, that when it gets to that pivot line, right, that's a pretty good trade to grab it on the inflection or wait for the dip. I tend to like to wait for the dip down below the line. That frustrates some people sometimes, right? When they're waiting for this to happen, they feel like they're missing an opportunity if it goes and doesn't make that little dip down below. In practice here, these all dip right down below the pivot line and then start making their way higher. 294.42 up to 295.10. That's not a bad trade either. All right, depends on the share size that you're using. But if what you're waiting it for is the move that goes and tracks back up into here, that's again a different animal than doing this thing 3 times or 4 times when it's trading in that channel. But those are both valid trading ideas. Those are both ideas that make sense given what we've seen happen earlier. So you're trying to put that together. You're trying to figure out, is that the route that I want to go with, with this particular trade in the triple Qs? Well, you can also look at, how far is the market extended on a standard deviation vantage point, right? So this could be, you could use Bollinger Bands here. These happen to be volatility based, but you can replicate what I'm doing here with essentially, I think a 14 period Bollinger Band, or a 15 period, not the shorter time frames that they usually use, but would be pretty close, I think, to what I've got going on here in terms of a volatility based setup. But again, right, what you're looking for is, I want to see if I can get a long trade-off, and I want to see if I can have that happen at this green line over here. And when I see price up in above the pivot here, right above the central pivot, price up here, and it's going to come back down to this pivot line here, then another thing that's giving me confidence is I've got to move now. This center line here is this is the mean, right? There's like just a moving average that's floating through your data. And what a move away from the mean in the case of these bands tells you is I'm down 2 standard deviations here from the average price, from this price. I'm up 2 standard deviations here. In terms of volatility, I'm down 2 standard deviations down here. 2 standard deviations is the 95% confidence interval. So what 2 standard deviations is telling you is the move that this has made has a 95% probability of making a reversion move back toward this line right here. So as you're putting the pieces of this puzzle together, right, this doesn't look like such a bad level to be taking some profits. You've got a VWAP that's set right there. You have your 2 standard deviation reversion would end right there. You have, oops, sorry about that. You have the volume by price data, right, that indicates that these levels are going to offer some support and resistance. And these things are all lining up now, right? So this is the way I like to put a trade together. I like to see that there's 3 things, 4 things, 5 things. I do look at the stochastic even on the, so I'll use the NDX 100. And when I'm trading these things, stochastics really are not an overbought, oversold indicator. That's not the way that they were ever intended to be used. When Lane put these things together, he was trying to use this to give you an indication of trend strength. So if you put a 14-period stochastic on the chart, it's handy, not really necessary. I'm going to say this is really just telling you that over the last 14 bars, this box that I just marked right there is in the top of the range, right? So this down here is telling you that you are close to 100% of the high of the past 14 bars. Is it useful? I think it's more useful for the angle. So if you're looking at it and you're just you're looking away and you're looking back and you're looking for this here tells you you've got some sort of stable price action that's moving higher. I would not be looking at this as a short sale indication. What I'd be doing is looking up here and seeing, okay, well, what's going on as this starts moving lower? And then when you get this inflection off the bottom and this steep angle on the chart going up, had this not been right into the closing bell, that would have been another indication that, maybe it's time to buy that, put on another trade, look for the move from, this threshold level up here at R1 and see, can we get, a move up to R2? Not frequently the case that we get up into the next set of pivots, but it does happen. If you get into the pivots on a gap, interestingly, we do a lot of statistics, right? Julie and I do a lot of number crunching, and, we're PhDs, we're statisticians by nature. And, we've gone through every single opening gap for the last 20 years in the indices. And, really, it's not necessarily the case that all opening gaps are going to revert, are going to make a move back. If they open above R2 or below S2 on the pivot lines, there's a very, very high probability, though, that they'll make a move back into this range here, sort of make a move back toward the next pivot line. Doesn't say it's going to close the gap, doesn't say anything else. It just says you got about a 74%, 75% probability, depending on the index that you're looking at, that if you gap, and the gap gets you down below here, that you're going to have a move back up into here somewhere. So, we're looking for pattern trades. Those of you who are familiar with my books, Around the Horn was all about the different market cycle patterns. Those things play out intraday just the same way as they play out on a daily chart. If you're looking at the chart of the triple Qs here, then if you're a fan of the book, it's actually not in print right now. It'll be back later this year with a revised version, but right. So there's like a double header set up, and what's it do? It follows through and makes the move to the downside. We're looking for things that tell us that the market momentum is about to change, and whether it's the fastball setup, which happens right here, or the switch hitter setup, right, which is happening in here, which is a fib retracement, right, it's happening in here. All of these things play out intraday. the same way that they do on the daily charts. So the only other tool that I use, right? I didn't tell you that this chart up here is here because this is where I start looking at fib moves. And when I go draw a fib study and I see that this pivot line that I was looking at that I said is confluent with this VWAP, anchored VWAP, and this volume by price, and this support line, and it also lines up with one of these fib retracements, that tells me, again, that I've got a very high probability that
Looks like we lost Adrian. But he's logging in back in now. So sorry, bear with us for a minute here.
sorry about that, guys. So
Okay, no problem.
all right, so hopefully we got disconnected right around the time I was talking about the fib retracements. Is that right?
Yeah, you'll need to share your screen again. That went out. Okay, looks
There.
good.
Okay. All right, we're back. So after a brief commercial break, here we are. So what I was just saying was that when I get these fib retracement zones that line up with the support and resistance zones and with the with the VWAPs, then I'll go and take a trade. So what I see happen is with some of my guys where they'll sort of fall on the sword, it's because they take too many trades. And over the course of the session, doing what I'm doing here, I'm going to have maybe 5 or 6 trades in the queues. But the outcome of those trades is going to have a very positive skew. It's going to be a very high probability trade. Dennis, yes, I'm on the wrong side of the moon frequently. But anyway, so it's like this is going to go and give you a way to get an edge. This gives you edge in the market, and edge in the market is really what it's all about. So, what else am I looking at in the morning? So I go and I set up, excuse me for 1 second here. We set up our gap trades, right? And this is a scanner that we have rolling that, tells us whether or not there's gaps on the open. And we'll look at these in a minute here in terms of what this is actually telling us. And then I also am looking at these things. So I'm looking at what's going to happen in the market, just the same kind of logic that I'm using for the live setups on the triple Qs over the course of the day. I'm also using on some super cap stocks. So what I do is I go through after the closing bell. And, this is also a trading plan that, our guys purchase from us. It's something it's a roadmap for what are we going to do tomorrow. And I'll pick the stocks that I see sort of the most liquid activity in this case. So for today, we had Microsoft, we had Netflix, and we had Tesla. And these tend to be sort of a very stable group of stocks that come around every day. These don't rotate out all that often. Like you'll see, Apple is actually a big component of this plan, right? Apple has a lot of, volatility that we've isolated over the course of days. So if you look at these levels here, if somebody wants me to shoot them, a copy of this plan so that you can go and dig through it and sort of see what it is, you can just send me an email. I put my email address in the chat. But These lines get redrawn every day to accommodate where the price action has been. And if you look at the last 5 or 6 days of trading in Apple, for instance, you'll see these lines didn't move at all. So the lines that I've put on the chart, these volatility bands that I've put on the chart, have been stable over the last 5 days, 4 days, and you can play these same ranges, with a lot of confidence over the course of each one of these sessions, knowing this is where institutional order flow is going. This is where, right on the opening bell, I know the options market makers have to cover up some of the positions that they've put out there, that their clients have put out there. So I know they're going to buy at the low line on the chart, and they're gonna get those shares covered up. I know over the course of the session where the institutional trade was, where the market makers are just sort of pushing this thing back and forth. And over time, if you wait for things to come into those zones, if you wait for things to come into the levels of volatility that you're expecting, you can probably just jot these numbers down really quick and see what happens today. You have a high probability of getting in front of trades that make sense. I don't trade these on the open. So these are probably a trade that I would put on starting 15, maybe 20 minutes. So, 3 bars, 4 bars into the market. I don't want to get caught in those wild swings on the open, and I don't want to trade these when the index that a stock is correlated with is swinging really big, right? So if you've got $2 moves on the Qs, and you're looking to use tight stops on these kind of setups, which you typically are, then you're not going to be trading Netflix, because Netflix highly correlated to the Qs, Microsoft highly correlated to S&P 500, right? And you go through and you look at these correlations sort of in real time. What's happening in the market? What are the stocks, the levels that I'm looking at doing? And then if you're trading these, when I'm looking at something like Microsoft, right? So let's take a look at, this would be like yesterday's data. So let's say that yesterday, based on the prior day's trading activity, we had setups in Microsoft that said we wanted to go long, which is what we did. And get these cleaned up here. All right. And so in yesterday's trading, we would have been focused on probably levels that look something like this. So before the bell, we would have looked at this. And this would have generated, this is like a no trade kind of a situation, because the market opened, I'm waiting 3 bars, 4 bars. This one is a nice entry, gets down to 260.17, runs all the way up to 261.07, right? That's a great sort of volatility band play, but I don't like it because of what the market's doing. It's swinging too much. Over the course of the session, though, you can set these up the same way, right? Doing basically what this trading plan is doing for the trading that's going to go on today. And what you want to look for is, so I think if Microsoft gets back down from the pivot line, gets back down to, this is the R2 pivot, the R1 pivot. If it gets back down and comes into 261.84, then based on what I saw earlier in the morning, where it was support, it was resistance back here, it's support right here, I'm anticipating that the stock is going to make a move back up into this 264.25 area. I'm looking for a pretty nice size move, or I can also look at the move from 261.84 up to 262.62, right? So that 2 spots 62 level right there, that's going to be an inflection for sure. These floor trader pivots really tend to be places that program trades are set up. And if you get into an area that there's programs, then there's going to be support and resistance there. This is just sort of a self-fulfilling prophecy. When it hits these pivots, you're going to see some reversals. Question is, are you going to see the big swing move higher? The thing that I like to look for on these is, I'm either going to look and say, I want to rest an order here, and I'm going to try to pop right back out if it hits that line, right? Or I'm going to look and say, I want to see this make a dip below the line and then have a move back up through the line. But I don't like to see it do it from a bar like this, right? So anytime I've got these really wide range bars, these are the things that I tend to avoid as signal bars on these trades. What I've got a data quirk here again. The market open. So we're into today. But if you're looking at these, right, what I like to see is the dip below the line be a little bit shallower like this. So especially when you have like a really wide range bar like this one, and then the next bar comes down, makes a shallow dip below the line. If I see that this is going to stop and reverse higher, and it's going to find support and resistance at this previous level here. Give this in a color you guys can see. Then, right, so after this wider range bar move lower, when I see that this next bar comes down, so I'm already watching, so I'm setting the trap here. I'm watching to see, does it come down and inflect at this prior support, sort of a that had volume by price associated with it, thing comes down. When it comes back up off the shallow line, now you've got the opportunity, right, to get into this move. Now the pivot line's changed. Why did that happen? It's because the market opened. So we're into today's trading now. We're into the new day. And when that happens, these pivots are going to change. The pivots are calculated based on your prior day's trading. This red line, I'm not going to get into all of them. The red line is the high plus low plus close divided by 3. So if you want the formula for all the pivots, I'm happy to do it. Just send me but your trading software should definitely calculate the pivots for you. Into the opening bell are looking at whether or not we have gaps. You see today, so far anyways, this sort of early on the open, we've got gap here, we've got LPSN, and we've got path. So it has a shot at something here. It's a $17 stock. I don't like trading these stocks, but this again gives me a way to look at things in a way that's meaningful to me. What I see here is on the S&P 500, S&P 400, I don't have anything that's a 2 standard deviation gap. So these are 2 standard deviations of volatility, right? Effectively is doing the same thing as those bands that we were looking at a minute ago. But this is saying, did I gap far enough for there to be a high probability of a reversion? Right? It tells me it's in the there is here on path, then that tells me that this is a news-based asterisk means earnings. So first thing I'm pulling this up on the chart. So
Okay. All right, we lost Adrian again, so I'm sure he'll be back in just a second. Okay, and here he is.
Sorry about that.
Hey, Adrian.
You're there. General is not great, and our hotspot's not great, so bear with me. Okay, here's the gap. Here's the gap path that we were looking at just a second ago. And what we're looking at is we've got this is a 2 standard deviation move higher. So in terms of volatility from yesterday's close, up to today's open is 2 SD. And now we're going to look for a move that reverts to the mean volatility. So the open for the day is right here. Horizontal line here. And we're currently moving in the direction of the gap. That's okay. That's good, right? We want it to, hopefully what we're going to see is a sort of a 1, 2, 3 stair step kind of a progression higher. That's generally the best kind of a setup for this thing. And then as it moves higher, I'm going to keep looking at the low of the current bar and trying to figure out if the price reverses and goes down through the low of the current bar, is there enough room for profit between that low and the open? The open is the most significant thing that's happened, over the course of this day so far. And the answer here would be no, right? So this would not be a trade I'd be looking to take. The other thing I would be looking at is I've got all this volume by price data out here. So that's a tell that opening tick might not be the most important trade of the day. It's probably closer to this level right here, which was the close of bar 1. It's where bar 2 took off from. And that's where we're going to start looking to take profits if we get a position open. So again, I'm looking for a 1, 2, 3 here. Let's see, price keep moving high. So we see a 1, 2, 3, 4. It could be however many bars higher during the first half hour of the trading day. What I'm doing over certain time periods, this particular time period, the first half hour of the day, I'm going to look at these gaps. Today's a lousy day for the gaps. All we have is this, this stock is really the only, because of its the volume that we're seeing on the open. That's okay. So now if we get this 1, 2, 3 stair step progression, then the game plan here is we're always going to look at a threshold level and say, is there enough profitability to the next level down? So we'll see how this one unfolds over the course of the next half hour here, or the next 20 minutes or so. Yeah, let's say that there was a big volume by price bar here, which there isn't, but let's say that there was. Then if we had a move down below 1731, would the move down to 1691 be worth it in terms of a trade, given that, right? You can see here this bump tells you, once it was above that, it shot higher. Then yeah, right, that makes sense as a trade. I've got, that's almost too tight of it. I've got about 15 cents of risk, and I've got 40 cents of potential profitability. That's how you're putting these things together. In this case, though, what we know is the ultimate profit objective would be here. So now what we need to see is this start to soften as it's moving higher, see that the volume by time is decreasing as price is moving up, and then see some ceiling activity here that says, there's not a lot of buying activity going on up in there, and then get a low that's put in somewhere up here on a bar, right? So if we had a bar that was up above this 1793 level and then had a reversal down below, and then maybe a move that gave us a profit objective down into 1731, then the trade starts to make sense. So that's how we look at these opening gaps. So we've got, the Microsoft stuff, right? So we're looking at, if we had our plan up, we'd be looking at the plan, seeing, well, what's going on with Microsoft? What's going on with Netflix? What's going on with Tesla? How are those things lining up? And, are they giving us the opportunity for an entry? just hinky on me here again. So if you guys have questions, you want to pop them in there and look at a particular symbol or look at a particular chart and see what the dynamics are and what we're expecting it to do. You can see here Netflix is doing pretty much some wide range stuff off the open based on yesterday's trading, though. We'd be looking at like these levels right in here. And as we're looking at those levels, when we see it punch back up through, if it gets up through 303.97, right, really there'd be another level right in there, then we'd have a possibility of, and again, we want to bracket these things up and look at where the volume by price is on these and look at where the support and resistance from the prior session is. All right, you see there we got through 303.97 from below, right? A little bit of a tougher trade here because it's around the open and these things are going to swing, but your target is 305.05. So if you're going 303.97, you're basically $304. You got $1.05 profit objective. Depending on the share size you're trading, you've got you've got a position in front of you that's probably going to make sense. Okay, so I'll get to the symbol and it said, does this work with daily and weekly? Yeah, absolutely. I mean, it's what you're doing is tracking the order flow, and you're looking at what a stock is doing over the course of today's session and also over the course of what's going on over time on a chart. So if you're looking at this chart, right? So Chewy, from my vantage point, right? For those guys who are fans like of the around the horn stuff, and again, it's not in print right now, but this is an infield fly bar, right? And that's a very it's a common if you're using the candlesticks, on a candlestick. So Julie does use candlesticks, but you look at the and G's and all this. What's about to happen? Generally speaking, if I'm going to analyze, I'm going to break it out exactly the same way that I just broke out the intraday charts. So I'm trying to figure out current market environment, what was happening earlier. And I keep coming back to it. How much happened in the past and what's happening right now. So if you're looking at it on a daily chart, right, this thing's pretty much ways. And you've got sort of a high range up here. You've got a low range down in here, and these are and we're just really up against it with this internet here. Yeah, so the internet gods are just really hating us here. I'll tell you what, let's see if there's any other questions that I can just answer while we wait and see if so sorry about this, guys, but so if you're looking at Chewy and you're looking at this intraday, then you pick it apart the same way and you say, now I know what I was looking at on the daily chart, and let's look at this on the intraday chart to figure out, are there levels that make sense? This is obviously yesterday we had a big trend lower and a big trend higher, so there's really the bias is going to be based on what's happening in the market today. We've got a very likely inflection down here. We've got a very likely inflection right around the S1 pivot line. And then, we've got the central pivot up here. So this trade could get boxed in to something that makes some kind of sense pretty quickly here. You're going to want to let it settle in a little bit and then focus on what happened when you see a big drop like we've got this morning. You want to focus on what happened yesterday, where were the inflections, and then start looking for, right, where are the retracements going to be. Based on what's going on, I can see I've got confluence around that central pivot. Where are those anchored VWAP levels? That's going to make a difference in where those inflections are going to be. You can't really get much of it going right now because you haven't had a lot of price activity yet. But you see here, you've got an anchor right there in yesterday's trading. You get an anchored VWAP right around where we're seeing a little bit of support right now. We saw that first inflection bounce. This all makes sense, right? So you just want to put together these areas. So the anchored VWAPs, you're always doing sort of trough to peak on a move, trough to peak. So from a low point to a high point, you're not extending it. You're not trying to make it fit. Don't curve fit your data. Try to get your data to make sense based on what it is that you're looking at instead of what you think you'd like to see happen. But yeah, so Chewy here, right? To me, this is a short for today. I'm going to see if over the course of the next few minutes, maybe we don't see a repeat performance of, like this swing high to this swing low. If we do, then you can see where the fib retracements are. You see that there's a 382 right at that anchored VWAP that we drew. Things are starting to make sense, right? Things are starting to line up. This is the way that I like to see the data. All right, if anybody else has any questions before this internet bombs out on me again, pop them in there. I think I'm getting kind of close to the end here of the allotted time, but you see what I'm looking at, right? You see that this is all about, it's a puzzle, and you're trying to put together the pieces of that puzzle. And whether it's, Netflix that we were looking at, right? And you're trying to see, is it gonna catch these inflections over the course of the session that we're anticipating, or you're looking at, Microsoft or, Tesla. I mean, these are all, the big names in trade. You're going to want to look at these sort of a little bit later in the day when price stabilizes. You're going to want to focus on things like the opening gaps earlier in the session. I forgot what that symbol was now, but path, right? Yeah. So here's path, right? So now, this trade that we were looking at earlier. So, this 1, 2, 3 thing kind of opened up a little bit too much. But it did give you what I call a double header setup, right? We looked at those a moment ago. So you're looking at an entry down there about 1739 now. So down right below this low is where I would actually be looking to go short. And then, are we going to get a move back down into 1698? That would be the, one logical place to look at a target. The other thing you'd want to do is draw, your fib study and just see, what's the retracement, what's the expansion level on this thing look like? And you see that, yeah, it sort of lines up down here. So if this was a trade that you're looking to put on, then you start setting up, you start boxing the whole thing up. You start setting it up so that you've got levels identified as an entry. You've got a drop deadline somewhere. You're looking at, what's going on in the market. Okay, well, I see where the volume by price is. I see, if this was my entry, then, initially I'm going to want to make something right up in here about 1755 would have been the stop on this. Is that a trade that's got a reward to risk ratio that makes sense? It's not as good as they are on most days when you get these big name stocks that do these opens. But in this case, yeah, it's a trade that makes sense in the way that it's set up. Once these bars start moving in my direction, it's going to be very, very quick that we would go and move the stop down to break even, right? So first I'm going with the entry bar high as a stop, and then if this bar travels in our direction and we get another bar put in our direction, then very rapidly we're going to move the stop down to break even on something like this. Again, the problem with this trade is this thing is $17, and $17 is not an easy thing to move the way that this 2SD thing works, right? What you really want is something that's a $50, $60 stock, has a lot of volume, and you get more than a 36 cent move or a 38 cent move that you're looking for. You get something that's actually more meaningful. Okay, so it's getting close here, right, to the end of my session. You guys have any questions about this? I know this is like really technical trading, and it tends to feel like, I had somebody tell me once that it's like taking a sip of water from a fire hose, the way that all this stuff gets layered on top of each other. But I'll tell you, the guys managed to do it. We've trained 20 something. We don't train many people. We do 40 people a year at our boot camps total. There's only 2 of those a year because that's really all I've got the energy for, I guess. But they managed to do this. There's been hundreds of traders over the years who have worked with us, who have learned how to look at the market this way in terms of order flow instead of momentum, in terms of letting the market come to you instead of chasing it. And if they can do it, you can do it. It's just a matter of wrapping your head around. It's a little bit of a different way of looking at the market, and it's at the same time very logical in terms of everything you've ever learned about the market, right? You're just trying to participate in the moves. You're not trying to beat them at their own game. You're trying to work with the market makers, with the specialists. You're trying to get on the same side of the market as the money. And yeah, the trips between the entry points and the profit targets, those swings aren't huge, but what you're trying to do is figure out where do they have their program set up? Where do they have their bracket orders set? And once their orders are out there, right, can I go and participate in the moves as the moves are just naturally unfolding? All right, anybody have any other questions? So that's my email address. If you think of something, or you want to look at something, or you want to join us in the morning and take a look at our our room and what we're doing. Oops, sorry, I didn't put it to everyone. There we go. Thanks, David. If you want to see what we're doing, you can shoot me an email, and I'll permission you into the room in the morning. Just be respectful. It's not a chit chat room. It's a we get in there and we set these things up, and everybody is just watching a bunch of levels unfold on the screen, and these guys are trading. I mean, there's only about 15 or 20 of us in there, and it's serious guys who are looking at the market and doing this for a living. So if you want to take a look, you're welcome. But I would just say, if you're in there, we're not shouting out a bunch of symbols. We've got trading plans ahead of time, and we've got an idea of what we're going to do, and everybody's just sort of looking at the same data, trying to figure out how to put together a day that makes sense. All right. All right, guys, if there's no other questions, thanks for getting up early, and keep an eye on path here and take a look at those levels that I had on the on that trading plan. Again, if you want a copy of that plan, also you can just send me an email. There we go. We just hit the target, right? So you can see the way that the trade unfolds in real time. So now what do? Do you take the target? Do you take the profit target off? I say yes, right? Because I set these up as bracket orders and I move on to the next trade. Some of my guys like to look for the extension moves. So they're locking in a portion of the profit at the target, and then they're going to take the balance and try to see if they can catch some other part of the move. Like I said, for me, it's a bracket order. I was in, 1735 or so, and then out at 1698. So it's a pretty simple trade. Okay, my time's up, I think.